Hello and welcome back to Bunnex Investment Group. In this video, we are going to answer one of the most asked questions, which is how do I count market maker levels? So I'm going to be a little bit open on this particular video and show you how to do this, and it's actually basing on a good heart. But before we go through, we have a free Telegram channel. I'll leave the link in the description box below. We actually share setups as well as our services and trading tips here and there, and sometimes free signals as well. So before we go any further, there is the most burning question is, does the market issue four levels in some cases? The answer to that is yes. In some cases, the market makers would actually see it not profitable for them to reverse the market without enough liquidity. With that in mind, they will actually issue a fourth level. Like in this case, we had level one. From that level one, we had another level, which is level two. Then from that level, we had a level three. And from that level 3 we had the fourth level, which is this one, right? 4 levels of rise, and on that 4 levels of rise, that is when we actually had a peak reversal, which is this M, and M was issued and the market started to go in the opposite direction. We could actually enter. Actually, it was a setup that I shared a long time ago. So after giving a completed cycle, the next thing that everyone or every trader who is attempting to use the market maker method is to anticipate for a reset, right? So in this case, a lot of people were now actually buying in this case, anticipating that this is going to be a reset, but later to see the market going in the opposite direction. Why did they do so, right? This now actually calls for us to have a long-term bias or a higher time frame bias to know where the market is going in the long term. So that is why we need to incorporate higher time frames when we are counting our levels. In this case, I love to use the daily time frame, and of course one can actually start from the weekly, monthly time frame, but it's now a sophisticated skill to incorporate all those high time frame levels to finally get a point of entry in line with that bias that you have acquired. So let's go on the daily time frame to see how we were actually going to know if this was the rightful direction, right? So when you go on any time frame, the first thing that you do is you need to get the recent peak, right? In this case, we can see that this is our recent peak, which was a peak reset on the daily time frame in the bearish side. So this was our point of reference. We call it our datum point or our starting point. After attaining this point, the next thing is now to see what happened from that particular point. We can see the market went down in this manner, and it's actually a very difficult move to segment it in levels. We don't want to lie to ourselves to say I was going to see this as a level, this is a level, or this is a level. It was very difficult to see or to segment levels in this particular time frame. So we need to go down. In this case, I'll move to the H4 time frame. From that point that we've seen, we now can see a little bit clearer, right? On the H4 time frame, you can see there was a drop, right? Drop, and then reset, drop, and then a possible reset at this point. So let's mark the levels so that they will be clearer for us to see. We had first level drop, right? Second level drop, third level drop, right? So in one daily level, we expect to see 3 H4 levels, meaning that the first daily level had completed. They made a reset at the 50 EMA in blue, and they restarted the cycle. Then we had another drop, and the last level was issued. So we now have two sets of threes, meaning that our daily level 2 was now complete at this point. So our third daily level is actually possibly started at this point, right? So what are we now expecting? We are saying probably we now have the first H4 level at this point, right? And right now we are in the second H4 level, and we still need actually one more H4 level to the downside for us to say this daily cycle is now complete. So we had 1, 2, 3 H4 levels, 1, 2, 3 H4 levels. We are now expecting the last 1, 2, and 3 to the downside to call this daily cycle complete, right? So what is the next thing? The next thing is now to verify if this is what is happening on the smaller time frames. Let's go on the H1 time frame to see if one H4 level has 3 H1 levels, right? So in this case, let me change my color. We had the first H1 level and its consolidation, the second H1 level, like this, and then the third H1 level like that, meaning the first H4 level is actually complete. There is 1, 2, and 3, and a reset was made, as we call it, one-legged pattern. And from there, our second H4 level, this is what we are anticipating. So in this case, we can see that we are in a downward trajectory, and it would be wise for us to be looking for downward sell patterns. In this case, if we go on the M15 time frame, which is our entry time frame, that is where we'll be looking for sell signals or sell patterns. So we'll be actually waiting to see a sell signal to be issued, and that sell signal can actually last for as long to as long as we've seen on the daily time frame, that we still need a full H4 level in the downward side. So that's basically how you count levels in a simplified manner. And of course, if you want to learn deeper methods of counting levels, we have an advanced course which you may make use of. It's actually going for $99. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and check out our free Telegram channel. The link is right in the description box below. See you on the next one.